Hey, what's going on, YouTube? It's your boy, the Stock Dude, back on the prowl again. Hey, in this video, I got 3 more bangers for you. 3 more bangers that I think you really need to pay attention to. Now, in this video, this is what we call basic technical analysis. Basically, what that means is I'm looking at chart patterns, I'm looking at volume, and I'm looking at setups of these 3 stocks that I think have a potential to make you and also me some extra money. And as I always say, I am not a stock expert, nor do I play one on YouTube. So with these 3 bangers that I'm going to give you, make sure that you do your own due diligence. And also, if this is the first time that you're visiting the channel, first of all, I'd like to welcome you. Second of all, I want to ask you to make sure that you hit that subscribe button and turn on that notification symbol. That way when the next video come out, you won't miss it. First on the list, first stock we got goes by the name of EGAN Corporation, ticker symbol EGAN. Basic technical analysis. That's what it's all about. That means basically I show you the chart setup, let you know what I think may happen, and you do your own due diligence. It's a partnership. I give you the setup, you read and check it out and see if it's something that you may be interested in. But EGAN Corporation, ticker symbol EGAN, coming in at only $11.62 per share. First thing that I like right off the bat, always go to the bottom of the screen, and I see that on Friday we had more than average volume in EGAN. Average volume comes in at 453,000 shares plus. But on Friday, the volume was over 1 million shares. And I'm looking at this and I see that back here in November, stock price gapped down, and immediately, this is a telltale sign, by the way. When the stock gaps down and immediately you see volume come in, buying shares of stock, see this big red volume spike right here? That lets me know that at this particular price, big money investors, they want that. They bought it. Soon as it gapped down from up here in the $17 range, that very first day, they didn't sell it, they bought it. The reason I know they started buying it is because after that gap down on high volume, you see the price has slowly been going higher. And it came down to this area right here. That's the first bottom. Bottom is just where the stock comes down, stops going down, and then reverses and goes back up. That's the first bottom area. Came down again the end of January. Same thing. It gapped down, and you see big volume came in again. That's the second bottom. Stock traded up in February, came back and tested this area of support for the 3rd time. That's what we call a multiple bottom formation. And at $11.62, coming in at a volume rate of over 1 million, this right here, I hate to tell you, but I say it all the time. Let me catch my breath. It's going up. It's going up. Once this thing breaks the price of right around $12 to $12.15, once it breaks north, higher than that, in other words, this has a potential to go up to the $18 to $20 range. Right now they got a price target of over $16 per share. Now it's trading at $11.62 a share. So here is my tip to you. EGAN, I'm going to show you that this will probably give you a gain. So EGAN lets you get your gain. Check it out. EGAN Corporation. Number 2 on the list is a company by the name of Rubius Therapeutics. Rubius Therapeutics. This is a biotech company. Rubius Therapeutics Incorporated comes in at $10.38 per share. Ticker symbol RUBY. First thing right off the bat, always go check my volume out. And what I noticed in the middle of December, we had a huge volume that came in the middle of December. Huge volume came in, and since then that volume has pushed the share price up, and it topped out right around $15 per share. And for the past month or so, it's been in a downtrend. But right here, I noticed that this big red candle was a buying opportunity. Now, the reason I know it was a buying opportunity is I see the volume came in high in this big red candle, and the very next day it put in a big green candle, which lets me know that that big red candle was a buying opportunity for the hedge funds, for the millionaires and for the billionaires. Reason being, the very next day this thing gapped up from where it closed at around $8. It gapped up on high volume, and we have this big green reversal candle. Now, I like this because number one, the average volume is 1.3 million shares bought and or sold. But on Friday, which is this green candle right here, this reversal candle, the volume came in at over 5.1 million shares traded, bought and or sold. And what I'm looking at is if this thing can get above this $12 mark, it's gonna fly, because it looks like it stopped falling. It tailed off right around here, this big red candle, which was used as a buying opportunity. And always look to these tails. See this little tail on the bottom? Once you see that tail, that lets me know that when the price dropped down to this low point of this tail on this red candle, it was bought. And the reason, once again, that I know that shares were bought and not sold is because of what happened the following day, which was on Friday. So being that this volume is 3 times plus more than the average, this gets past $12 a share. I don't know, but it's going up. I'm telling you, it's going up. I do know, I changed my mind. It's going higher. So let this thing break above $12 and you can ride this up to the $16 range. And if it breaks this high of this candle beyond $16, biotechs, the sky is the limit. That's why you always, just a tip for you, always pay attention to biotechs, because anytime a company can develop a treatment or a medication, it has the potential to skyrocket once it's cleared by the FDA. So once again, Rubius Therapeutics, ticker symbol RUBY. And from what I'm understanding, I'm looking at my notes, they deal with cancer research. So it's a cancer research and treatment company. And the thing that I like about this stock was up on high volume, over 5 million, and up $2.36 per share on what was a bad day overall, trading on Friday. Now I'm on my favorite website, finviz.com. If you look right here, this shows the Dow Jones Industrial Average, the candlesticks for the Dow, deeply in the red. NASDAQ was up, but the S&P was down, and down pretty sharply, not 0.5%, but it was down pretty bad. And this heat map tells you all you need to know, because this heat map lets me know by seeing all this red on it that we had more stocks that traded lower than the ones in the green, which traded higher. It's more red on this heat map than it is green. So on an overall bad day, Rubius Therapeutics Incorporated actually traded higher and also on higher than normal volume. Shares bought and or sold. So I think it'll be a good idea for you to check out Rubius Therapeutics Incorporated. And if you decide to buy some shares and you happen to mention this to somebody else, tell them the stock dude sent you. Last but certainly not least on the list, one of my favorite companies that goes by the name of Apple Incorporated. Apple, ticker symbol AAPL. Now I gotta be honest with you. Apple has been sort of a disappointment this year, because Apple's been kind of trading down ever since here near the end of January. Not quite the end, on the 25th of January. Since that day, each one of these candlesticks a day is represented by one candlestick. So since January the 25th, Apple has been consistently going lower and lower and lower. I actually sold out of my Apple shares and just decided to take profit on the shares that I had in Apple, because I looked at this chart and I said, man, I can buy these shares back at a much lower price when Apple turns around. And trust me, Apple will turn around. And when it turns around, I can buy them back at a cheaper price, and I can ride this right on up to this $140 and near $150 range where I expect it to go. Now, from what I understand, I've been hearing that Apple has been selling a lot, and I do mean a lot, of the new iPhone that they came out with last quarter. And from what I'm understanding, that Apple is expected to do very well on their earnings report, which comes up, I think it's the end of April, if I'm not mistaken. February, March, yeah, the end of April, Apple reports their earnings. So I'm going to show you a backdoor, cheap way that you can take advantage of Apple and their upcoming earnings report. And once again, for those that are brand new to this channel, I want to ask you to please hit that subscribe button and leave your boy some comments on either one of these three stocks. Which one do you like the best? I'll be honest with you, I like Apple the best. But one thing about Apple right now is still in a downtrend. So my advice to you, which is for entertainment purposes only, is to wait until Apple comes down between $115 to $120 per share. If you can get it under 120, I think you'll be all right. But once this thing stops coming down and you see a big green candle or a candle with a leg on it like this one right here, once you see this under this $120 mark, especially if it's on higher than normal volume, Apple is gonna go higher, and Apple gonna go much higher. So I'm gonna go to Yahoo Finance and type in the ticker symbol for Apple, and I'm gonna tell you a cheap way to take advantage of Apple's upcoming price reversal, which I know is coming. That's why I'm letting you guys know before it happened. So their earnings will be reported near the end of April. So what you want to do is look at your option contracts. Now, option gives you the right but not the responsibility to control 100 shares of Apple stock. each contract is equal to 100 shares of Apple stock. So you want to get a contract, which I call lottery ticket, because the prices are relatively cheap. You want to get a contract that will allow you to take advantage of their expected good earnings report coming up the end of April. So this one expires in May. So that comes after April, so you can capture some of that gain if their earnings report is well received by the market. In other words, if they report earnings and it trades higher, Apple usually gaps higher in price. And when the price gaps higher, these option contracts right here, they can explode. So this right here is what I'm looking at. It's just me. Basic technical analysis. Basic technical analysis. That's what I'm looking at right here for May expiration. I'm looking at for Apple buying some of the May 200 call options that expire May the 21st. So if I were you, which I am not, but if I were you, I would also look at these call option contracts that expire May 21st, 2021, 200 call. They're going for $29 per contract. And I know that if Apple beats their earnings report, that these contracts will, at the minimum, at the least, double. So here's a chance to double your money for only $30 per contract. And if Apple blows their earnings report out the water and the stock price gaps higher on high volume, and you see a big green candle and everybody's excited about Apple, you gonna be more excited than most, because one of these $30 contracts that I call lottery tickets will go up in price. You can pay bills with it. Trust that. I just paid bills with one last week. So I'm giving you, as one of my viewers, an opportunity. Grab hold of one of these 200 call option contracts that expire the 21st of May on Apple and pay some bills with it, man. I'm the one known as the stock dude. I hope, I pray that you guys come back and visit the channel, and I'll holler at you later. Peace, stock dude out.